Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on gold, the miners, and the dollar. So the dollar is still potentially forming this bearish reversal head and shoulders pattern. We have our double top. Well, it was actually a lower high, but 101.76, 101.72, upper wick, bearish candlestick, confirmed last time, confirmed this time, and the bears want to see a break of 141. That would be a lower high and then a lower low, heading back down towards our 99.43 support. So the bears currently have momentum in the dollar. That lower high very clearly set right when the bears needed to show up, they did. And the question is going to be, can we see a break of 141, or are the bulls going to form a higher low and continue to see a tightening range with our higher low, lower high tightening pattern? So looking at it a bit more zoomed in on the hourly time frame, clear lower highs and lower lows here where the bulls are struggling to turn things around. There are plenty of support levels down here, 177, 153, 142, just looking at all these consolidation lows. But there's also plenty of resistances, 101.12, 101.44. So right now, the bears have momentum in the dollar. We look at gold. Gold had a big-time bull break. So loving this action. You always know that your trend lines and patterns are correct when you see a response like this on a break. Look at the volume, very light. Look at our ascending triangle pattern. Resistance was very clear, and we closed above it. And then the next candlestick, 2 candlesticks in a row, huge bull volume, big-time breakout. So that lets you know that you are watching the right level because a ton of other traders are watching that same level and jumping in once it breaks. So now we're consolidating a bit. The RSI stayed pretty overbought, right at 80 the majority of the day, but we're holding on very strong. The low of this consolidation is 1245.97. If that breaks, we look down towards support of 1238.85. Previous resistance will now act as support, but this is the highest price we have seen on gold on this entire bounce. So that is extremely strong. You see the daily time frame above all those resistances. And in terms of where to look for resistance from here, we're looking back at the October trading range, and there's not a clear, distinct level like there are many times. There's a bunch of price action around 1250 to 1265. All of this trading in October was within that range. So can't really pick out a distinct level. I'm looking at 1250 psychological, 1255, 1260, because there's so many individual levels within this range right now. So the bulls are in full control on the daily time frame still. Look at the volume. That couple days of consolidation, look at the volume compared to the bull volume the past 2 days. So the bulls are in full control of the gold price action. Nice follow through to the upside. And we did see some interesting action in the miners. At the end of the day, we had an all-out dump. And we closed at the low of the day on the miners. And this is a perfect example and a great reminder that these miners are not directly correlated with gold, which means we're not going to go up if gold's going up automatically. They are their own trading instruments. So let's look at the 5-minute time frame. It is relevant supply and demand of shares, and it's also relevant technical analysis. So what we saw here on NUGT on the 5-minute time frame throughout the day was a tightening pattern reaching an equilibrium. We had our high of the day, our low, lower high, higher low, lower high, higher low, lower high. And by the end of the day, we are extremely tight. And if we see a break of 1179, it's a bear break. If we see a break of 1196, it's a bull break. It ended up being a bear break. So there's a couple things going on. Number one, you have gold with the hourly RSI up at 80 all day. So I would personally be locking in my profit in that scenario because I know the odds of consolidation overnight are more likely than the odds of continuation due to that consolidation being necessary. So that is a factor as well. People more likely to lock in profit, seeing that consolidation in gold is potentially likely overnight. Another reason for locking in profit is the bear break of this tightening pattern, and it just magnified itself. If we see a bunch of people run to the exit at the end of the day, it's going to trigger stop losses. We're going to see increasing volume, and then everybody's going to try and run out. And that's exactly what happened. It really magnified itself at the end of the day. JNUG, same thing. So that's why it's important to not lose sight here of the fact that this is an individual ETF, JNUG. It is trading on its own. It's trading with big time factors in gold, silver, and in the market overall, but it is also trading. What if, let's say I was a billionaire and I came in with $10 million and I'm just going to buy $10 million worth of JNUG. Obviously, JNUG is going to skyrocket and it's going to have absolutely nothing to do with gold or the market. It's going to have to do with supply and demand of shares. So we can't lose sight that this is an individual trading vehicle that is subject to that. And the same thing with JNUG with our high, low, lower, high, higher, low, lower, high, higher, low, lower, high, higher, low, lower, high, all out dump. So it was a very clear tightening pattern, range getting smaller and smaller with a break to the bear side down at the end of the day. So looking at the daily time frame, is going to start with gold here. Gold is an individual stock, and we had a bull flag consolidation pattern and a big time break the past few days to the upside, but today we did form a bearish reversal gravestone doji. A red day tomorrow will confirm it. If we break 94.59, there's a gap to fill at 93.40. The bulls definitely have momentum of this chart with normal healthy consolidation before continuation, but that short-term candlestick does show some profit taking. So we are very strong on the weekly time frame as well still. We know gold just made that bull break, as I pointed out, but gold, the ticker here, is seeing the potential for some consolidation after 2 gap ups in a row. GDX losing that middle Bollinger Band yesterday, back testing and rejecting from it today. We had the gap up open and the close near the low of the day, and now this bearish TCG cross is a bit more convincing. So the fact that gold is at the highest price we've seen, and JDX here, make that GDX, 25.71 was the high that we saw, and we are now down at 24.37, so $1.50 off. That's almost 5% off from where we were when gold was lower. So that's just another perfect example. The market is stronger, the gold is stronger, but we're seeing a bit more weakness in these miners. So we're still watching the weekly time frame, which is very normal and healthy consolidation. Again, long-term bulls are looking for this to be a bull flag with continuation to the upside after consolidation is done. But the daily time frame, shorter term bulls, definitely concerned with the loss of middle Bollinger Band and the bearish TCG cross of these exponential moving averages for the first time on this move to the upside. GDXJ also seeing a gap up open and a close at the low of the day, but GDXJ is definitely stronger and that middle Bollinger Band. And again, it's the exposure to silver, which could be a factor in that. But that middle Bollinger Band is very easily support still. We don't have a bearish TCG cross on those exponential moving averages just yet. And the weekly time frame is also looking like a nice, healthy bull flag of consolidation on decreasing bearish volume. So overall, long-term bulls, perfectly content with the consolidation that's going on. No red flags on the weekly consolidation. Daily time frame, GDXJ bulls are certainly happy. And GDX bulls, not nearly as happy. So we'll see if gold continues with this strength. That is a really nice way to head into the end of the week for these minor bulls. They do have momentum of the commodity in their favor, but again, people were locking in profit, and technical analysis was indicating a break of support, which led to magnified profit taking and stop losses being triggered. So I appreciate you watching. We'll check back in over the weekend to see how this week wraps up. See you then.